Good morning, everyone. Warm welcome to each one of you. Thank you for being here today in our webinar organized by CA Speakers Forum. Gratitude to each one of you. Gratitude, deep gratitude to our speaker, CA Bharat Jeswani, who is here with us today and will be taking up this session, which is of extreme interest and where we find very limited experts. Now, coming to the AML part, the regulations have globally evolved, and if we talk about specifically UAE, from the last more than 2 decades, the regulations have been evolving. There had been a new law introduced in the last year, and it will continue evolving with the changing circumstances. When I say about AML, there is something which I relate to, and that is a book, The Panama Papers, which I had read few years back, and also some series and movies on Netflix. And there are ample of such series. One of the series, if you have to watch, it may take you 70 hours. So it's like that. But one movie which is called Laundromat, and which is less than 2 hours movie, is a great movie. You will enjoy what is being shown there. You will laugh, and you will understand the subject. And today I'll not talk much about this subject because we have an expert, Bharat, who will be talking about this subject. And it is up to the Bharat that what he wishes to share, because he knows that what can make a difference to us as an audience. And Bharat is a professionally qualified chartered accountant. He has significantly contributed in the Institute of Chartered Accountants of India in various initiatives, from forensic to vast number of subjects. I have met Bharat several times. He has been to this place where I'm sitting today, to my home once, and he had gifted me his book. And I would advise you to please do read, and also request Bharat to share about his books which he has written as he continues with the next 45 minutes of the session. So before I hand over to Bharat, I would request Bharat to please say his opening remarks for 1 or 2 minutes, and yeah.
Yeah. Thank you so much, Sir Prabdeep sir. It is a pleasure to be discussing with you anti-money laundering. I've known Prabdeep sir since many years. Been working now in UAE also, UAE Muscat. We have been also trying to planning an office in Singapore. So this is we are mostly working in anti-money laundering and other financial crimes also. So just a very little about my book. It is called The Frauditor. It is about fraud investigations, and international edition was released last year. So that is being one where you learn about fraud. There's nothing to do with anti-money laundering. But yeah, it is about fraud investigations. So I'm very happy to talk about the evolving landscape in UAE. One of my mentors, who is also an advisor to my firm, is AML director to for India, for the government of India. He was recently involved in the mutual evaluation of Singapore. So we do have a lot of dialogue with the regulators, with the UAE regulators also, and we do discuss, how things are evolving globally. So UAE market is very matured. So we'll be discussing how, the expectation is changing and it will be very useful for anybody practicing in this domain or also who are ML not practicing maybe in the MLRO, who are MLROs or who are employees or who are just intrigued by anti-money laundering. It will be very useful this session because we'll be discussing what the regulator is thinking, what the regulator is expecting, and how things are going to change in the next few years. So that is our perspective. I have picked about 10 cases. I'll try to complete
Right.
all of them from
Okay.
our own actual case library. We have picked about 10 cases. Uh, Almost eight of them are from UAE.
Right.
Remaining are from other parts of the world, but they are very relevant. So we are trying to explain some themes and some concepts, some expectations from through these cases. Basically, we have just taken some
Okay.
extract in these cases,
Right.
so it would be useful. So
Yeah,
I think
yeah, yeah.
I'll
Yeah,
just
yeah. So
yeah.
before you move on, Bharat, I will request everyone, each one of us who is present here today, please show your love with the emojis and give a grand welcome to Bharat, and uh, so that we have a great
Thank
few
you, thank
minutes ahead. Thank you, Bharat. The screen is all yours now. Thank you.
thank you so much. Thank you all. Thank you, sir. I'll just start. Okay, so today, as I said, we'll be discussing uh, 10 cases and in general, what the regulator, I'll just, before jumping into these cases directly, I'll just talk about, how things are shifting in the AML space. So when you talk about anti-money laundering, it has always been known as a very important compliance function, something that does not add much value for any organization. For example, a bank, uh, fintech organization, or real estate company, they are just looking for the bare minimum compliance that is required, and that is how it has been always. But slowly, things are shifting now. Now, what is expected out of an entity, out of a compliance officer or an MLRO, is a little more than the bare minimum compliance. What the regulators are looking for is kind of intelligence, and not artificial intelligence. It is they're looking for intelligence, behavioral intelligence, network intelligence, these kind of things which we'll be discussing from a reporting entity itself. So when those reporting entities or the complying entities, they need to be looking at transactions from a different perspective, from a more wider lens, and this is all coming up in the mutual evaluation. So when countries are being evaluated, at that point, the evaluators are bringing up queries like this. They are bringing up questions that, excuse me, yeah, yeah. So they're bringing up questions on these lines, wherein they're talking about how uh, yeah, sorry. So they are bringing up these questions wherein how the complying entities are uh, being more intelligent. So I'll just start on the jump on the cases. Now with the cases, we'll be able to understand all these things much better. So we are talking about a real estate company. Uh, so they have to comply in the UAE. They also need to comply with AML regulation. So somebody came to buy three luxury waterfront apartments, and they were paying AD 18 million. Everything seemed very good on paper. So when you look at the client profile, it is a UAE resident, quite well known globally. They have an international family office. They are dealing with multiple countries, and they are involved in big deals. Uh, they are quite their consultants are known, so they are. It's not like they are not professionally advised, and they have a offshore holding structure, which is quite common with ultra high net worth individuals. So everything, when you look at the profile, it was quite a very regular real estate deal, when you are going for an 18 million dirham deal, these are all very common. So the client was high value, you're sophisticated, professionally managed, and everything was fully documented. When the compliance team asked for all the documents, everything was provided to them, audited financial statements, records, everything, bank statements, everything that is required for compliance. All of that was very much provided. And so everything was there. Now the institution, okay, sorry, just uh, just a second. Sorry, just a second. Just my screen just somehow started behaving. Okay, sorry. Can you still see my screen?
Yeah, yeah, yeah. It's visible, Bharat. It looks fine.
Okay. So when you look at everything, it is everything. All the documents are in place. So when you have all the documents, no, it is normally any institution, any uh, organization, they'll become very comfortable because you have, that is what matters. Documents are the most important thing when you're complying. So they have all the documents and everything is there. But then when you look deeper, when there are further analysis goes on, there you realize that funds are coming from multiple legal entities. Now 18 million dirhams, they are not coming from one single entity. They are coming from multiple entities in very small blocks. So that is what is happening. It is coming from not just one country, it is coming from all different countries. And other than that, they have a very layered structure. They have too many holding companies. Normally, it is expected to have some kind of a holding company and one subsidiary, probably one trust, one offshore account. All that is quite common, but they have a very complex structure. So when you look at that one every single transaction, there's small values coming in from different uh, countries, different organizations. So it one single transaction does not trigger anything. But when you look at it from bird eye view, you'll see that everything is very complex. It is not justified, and that is what happens in this case. So it is not what normally when you're looking at AML compliance, you're checking the sanctions list, you're checking if there is any adverse media, if there is any illegal trigger. None of that is happening. What is happening is not mentioned in the law. Like this fragmented funding is not illegal. Uh, it is the too much of layering which is there in their case, that is also again not illegal. So there is a lot of complexity involved in this structure which is not required for this. So that is something that an AML team should question, an AML function should question, but it normally does not. So this is where we are moving now. So when there is currently, if you proceed with this transaction and you do not report this transaction, then there would not be a compliance issue at the moment. Reason being that you have all the documentation, there is no sanctions issue, there is no KYC lapse, none of that is there. So there will not be an issue at the moment. But when things go south and when the regulator comes knocking, at that time, they would be expecting much more from you. They won't be satisfied with the documents that you will be sharing with them. That is what is happening. So here, as you see, you have everything in place. The document is there, but there is some behavioral anonymity. There is something which is not does not feel right. Okay. So, but what happens in this case? What happened in this case that this happens a lot with deals. So the relationship manager will come up. It will tell you that the client is quite well known. It is very these kind of complex structures are very common when it comes to ultra high net worth individuals. It's very common. We already have the sufficient documentation that is required for compliance, and we cannot just get leave this very important relationship, this very important deal, just because an analyst in the firm feels that there is some lapse, probably there is some behavioral anomaly, something like that is happening. Just based on that, we cannot let go of this important transaction. So this is what the relationship manager or the sales side will be talking about. This is what happened in this case also. And then the risk aspect, where why is there so much fragmented funding coming, why is there so complex layering that is happening in this case, that is just thrown out of the window, that goes outside the window. So this is what most how things like this, these happen in the real world, wherein uh, somebody would the sales side will dominate. Of course, the deal will dominate above the compliance. The profits will definitely dominate above the simple costs. So that is what happened in this case. And once the sales team sets in, then they have to start. The other compliance team, they need to get comfortable with whatever they have. So they then start to justify as to these transactions, just because they have to, otherwise they'll have to leave their job. So that is what there were so many questions that were unanswered, that why so many entities are funding, that too in different countries, why is there so much of layering, why is there a fragmented movement, why this economic behavior does not make sense. I mean, the wealth justification and all that does not make sense with this kind of a purchase. So all those things were the questions that were then left unasked, and they went with the compliance. Uh, in this case, documentation was not a problem at all. Every document was available, but they didn't try to understand what was very obvious, what was very evident to them. And obviously, because they want to proceed with the deal, which happens a lot in real estate transactions. Okay. So later, all these things, they would obviously show up at some point. uh, we can hope that they don't, but there is a very high exposure, risk exposure, that we will we are dealing with. So what was the failure here? There was a lot of layering. So there was ownership opacity. Who was controlling what? It was which we need to know whenever we are doing a real estate deal. We need to know how what kind of ownership is there. Fragmented funding, which did not make any sense as to why funding is coming from different jurisdictions, from different entities, for a purchase of an asset which will be belonging to one entity. There was a lot of behavioral inconsistency, which was, again, as I mentioned, the source of wealth did not justify the purchase. Uh, there was one very major weakness. What this case is about, what this theme is about, is the commercial pressure. When the commercial pressure set in, that is where all the problems they began. There was a documentation comfort bias, which is always there. So when the commercial pressure sets in, at that time, these documents are the ones that save you. They will be like, okay, we have the documents, so we are complying. So let's go ahead with the deal. So this is what is happening currently, but this is again going to be changing. The regulator is not going to be satisfied with the document. They are going to ask you more questions. Did you invest? Did you understand the things, that will be coming in. So in this case, we are understanding how the source of funds were, but we are not very clear about the source of wealth. We are ignoring the source of wealth here and we are proceeding. That is what has happened. Uh, So what this is what I'm saying. A sophisticated regulator, which is UAE regulator, is very sophisticated. It has matured, and it is one of the very intelligent regulators also. So they will be asking these questions. Did you genuinely understand the structure? What behavioral interpretation was there? Was there any commercial pressure influencing the comfort? Was escalation culturally discouraged? Was ownership opacity meaningfully challenged? All these things will be asked because all these things are very obvious. They are coming in. So with the current expectation of the regulator, one cannot just get away saying that, okay, we have all the documents, so we are complied. That is not going to work in UAE. So that is what is changing. That is what is shifting. You need to be more intelligent. You need to be uh, gathering evidence and you need to be prepared. Regulatory defensibility is changing. Yeah. So the modern AML supervision, not just in UAE, we have also studied Singapore market that is even more matured. There they are, it very much evaluates the quality of institutional judgment and not the documents. So a good some institution that wants to avoid any kind of penalties in future will be having all these documents in place, processes in place. And not just the documents, they will also be asking these intelligent questions and then taking the decisions based on those answers. So what this case was, it was not about any documentation missing because all the documents were there. There was no sanction issue. There was no technical non-compliance. It was basically weak behavioral interpretation, commercially softened scrutiny, and lack of narrative intelligence. So what you can see, but you did not want to accept because that would have thrown away the deal, which happens in many real estate cases. It also happens with banks where they don't want to throw away a customer, a client, because they have some shady information about that client, but they are they have all the documents, they are fully document compliant. So the banks are also very pessimistic when they want to throw away any kind of clients who are having all the documents in place, but maybe some shady information which is not public. Okay. So next, let's go to gold and jewelry, precious metals. Again, here also. So I'll be discussing as I realize that I just have 1 hour, and so I'll be discussing the themes and broadly the cases. I'll be sharing this presentation with Prabhdeep sir, so it can be made available to everyone. I'll be also sharing it on LinkedIn. I do share my presentations whenever I speak at forums. So I do share my presentations for the benefit of everyone. So you can, deep dive later. I'll be just focusing on the broad strategic themes. So this is the next case. A gold trading company, international exports, rapid business growth, multiple African and Asian trade corridors, high volume transaction activity, multi-bank relations. Everything looks good on paper, very fast growing, commercially successful, operationally sophisticated. Everything is good. Okay. When you look at the documents, there is licensing is there, documents are complete. There is no sanction issue. There is no counterparties, all the counterparties appear legitimate. Transaction volumes are aligned with business. Everything is good when you look at this uh, gold and jewelry business. Okay. Problem is sophisticated AML cases is rarely obvious illegality. Problem is hidden in some behavior which later show up. The behavior problems, they show up later. It is not in the beginning that you see all that. Okay. Now, what is the problem that arises? We'll be looking into it. Everything looks within the limits, you know, when systems are monitoring the transactions, there's nothing wrong. Transactions are within thresholds. Sanction screening is clean. Invoices are all acceptable. There's nothing wrong with any transaction. So this is what traditionally what we are monitoring. And any entity or any criminal enterprise, they are well aware of what we are monitoring. So they will of course escape any kind of scrutiny in the traditional monitoring system. So that is what we are monitoring. Later on, these behavioral inconsistencies were emerging. Okay. One, unusually thin margins. Now, what is the problem with that? Why are you doing business if you are making so little, which is not close to the industry average? That is one. Second, you are dealing with a lot of high risk trade corridors. Uh, your trading is very complex. It is not direct one to one. You are going through multiple jurisdictions, and payments are coming from other parties. So there is multiple unrelated settlement entities. There are inconsistent counterparties that emerge. So somebody who is in the business of chocolates is buying jewelry for trading. So something like that emerges. Does not make sense. Then your parties are not in the same country. Probably you have started dealing with different other countries that are again high risk, high privacy, low tax jurisdictions. All of that is happening with you. So this now individually, if you look at that, if there is a thin margin in a business, not a problem. Uh, Sometimes you are dealing with high risk trade corridors, or there is some structuring that is there. All that is one off transaction, that is all okay. But when you look at all this cumulatively, that is a very big problem. You can see what is happening here. So this is what should happen. One entity, another entity should be buying, but here we are saying there is so many multiple entities, so much of it is going on from. So there is a visual discrepancy that there is a core structural weakness. Legitimate trade transactions do not go like that. This is something which is structured. So that is what is happening here. So when you are, this is the first question that comes in. Why is there so much? There is settlement fragmentation. There are unstable counterparties. There is routing inconsistency, economic behavior that is lacking any kind of commercial sense. So these are the questions that come up. And how does that, entity reply that this is what happens in our business. We are normally operating in low margins, which is not true, but they are claiming that it is what happens. We are in a wholesale business and it is what happens. When you are dealing with African trade corridors, there is a lot of structuring there. That is what they are saying. Third party settlements are very common in our business. So these are just explanations that a business is giving, trying that they won't be reported, and they won't be questioned further. But uh, the final thing is that client is generating sufficient revenue. So that is something for your bank or any organization, that we are doing so much revenue. So that is, we don't have to ask us so many questions. That is very common. That also happens. So this is basically trade-based money laundering, which is happening here, and it can be seen. What the common thing about TBML is that it hides under the very legitimate trade. So millions of transactions happening every day, it is very hard to find, illegitimate or transactions that involve money laundering. So that is what is happening here. There's a lot of the the money laundering happening here, but it is hiding behind a regular trade. Okay. So these were the weaknesses that were identified. Economic logic, why were you doing this business at such thin margins? Did not make sense. Why other parties were settling payments? Why were we operating in such a high corridor risk? And all these things. Why were there so many issues with these transactions? All of them came up. Uh, as I said, none of these individually come up, prove any criminality, but they create a behavioral discomfort. So when you look at them, all of them together, they create a problem. That is also one thing which is a regulator is expecting slowly. They want you to look at transactions not as just transactions, but they want you to look at it as networks. They want you to understand it from the perspective of a network, as in you have to connect the dots, you have to see how relationships are moving, how the funds are circular trading. Uh, so they are not just going to, when they ask you, do you understand corridor risk? So they are trying to say that, are you mapping the settlement relationships deeply? As in, somebody is buying, somebody else is making the payment. Is there an understanding as to who is making the payment and the person who is buying? Is there some kind of pattern? All these things. Uh, they want you to understand the behaviors from a network perspective as to how many things are happening together. Uh, are you looking at the network intelligence? Are you understanding the behaviors? So the regulator is moving towards, increasingly, they are moving towards the commercial understanding of transactions. So if you are looking at the transaction just from one perspective, as in the money is coming, okay, so there are low margins. Okay, no, what is the problem if there are low margins? What is the problem if a third party is settling? So if you're looking at it from one transaction at a time, that is a very big problem. You have to look at it from a complete network perspective. That is what the uh, expectation is. Okay. So you cannot just rely on simple transaction thresholds, which are there in all the monitoring systems, transaction monitoring systems. You need to have behavioral monitoring. Uh, you don't have to see if the procedure is, the invoice is, acceptable. You have to see if that trade makes sense. It has an economic rationale. It is something that one would do. Don't normalize, complex third party settlements. You have to see if those settlements, uh, they show up, if they are related to the party that is purchasing, or those settlement parties are related to some criminal network, or they are regularly involved in these kind of settlements. All these things need to be understood. So focus on operational justification, and you need to just cannot just focus on that. You need to have a rigorous corridor risk analysis. All kind of risk analysis has to be done. So I'm sure when I'm discussing this, you are wondering as to, uh, what all we expected to be investigators now by the regulator? Are we supposed to be the people who are just doing their job, doing the job of the regulator? And the answer is, in a way, yes, we are required to do, but there are slowly, there are tools that are coming in, there are resources that are coming in that will help you do that. Uh, Currently, just based on the law, you could still survive with the paper compliance, wherein you have the documentation, you can survive. It is quite defensible, but it is a matter of time. Things are changing, and with the latest, cases that come up in the public domain, or as we are also engaging with the regulator, we are also having those scrutinies. When we are responding to scrutinies, we see that there is a lot of, intelligence expectation that is coming in, where you have to look at the transactions from a network perspective, from you have to look at the behaviors and not just comply with the documents. All that is slowly coming in, and regulators have started expecting. So when all this is fine till everything goes on, everything is in place. But once the problem arises, it is afterwards that is we can't, then when when scrutiny starts and then the regulator comes knocking, at that time all these things they matter. At the moment we can comply with paper, but I think AML functions need to build these kind of systems and these kind of tools so that they are future ready, they are prepared for the regulator. Okay, so let's discuss another big wealth management client quickly. This was another case wherein there was a ultra high net worth individual dealing with, you know, very common international. They had very international structures, significant assets, politically connected. Uh, Having being a long-term relationship with the wealth management company. So all of it was all there, very important relationship. It was never viewed as a risky, he was viewed as an important relationship. So when you view somebody as an important relationship, you automatically, your risk bias, your perspective towards that client changes. So slowly what we saw that there was a lot of ownership opacity, uh, lack of economic sense. There was layered fund movement, uh, multiple intermediaries, few frequent offshore restructuring, cross-border transfers. All these obvious red flags that you see with a client when they are dealing. So what was suggested was, let's go for enhanced due diligence. Let's escalate this, and let's go for a deeper source of wealth understanding. But this is again very similar to our first case, wherein uh, uh, when you want to when it affects the relationship with the big client, all these things comes up. That all these high net worth structure, all these commercially sensitive clients, you cannot just get into their pockets, and you cannot do their audit so easily. uh, don't escalate this, all these things, pressures, they come in. So I think I'll just skip this case because it is very similar to the first one. So this is what happens is when you are in real world, what you're dealing is the deals are more important than compliance, and that makes perfect sense. Businesses are there for profit. They are not there to comply with the regulator. But when the regulator would come in knocking, they can, threaten the survival of that very business once. So, uh, uh, there is a lot of uh, blind spots are there when you are dealing with the powerful relationships. Okay, so this is again very similar. Okay, we have gotten to case 4, which is good, uh, which is of an exchange house. So in this case, again, this case is also talking about how you want to look at transactions from the perspective of not just single transactions, because sometimes what happens is single transactions, they appear very normal, everything appears completely compliant. But when you look from a bird eye view, when you look it from 3D perspective, at that point you see that all of this is not making sense. So that is what this case is about. When you look at these transactions, everything is in place. There are no velocity triggers, transaction size is proper, there is no sanctions that is happening, nothing is happening here. So when you're looking it from you know uh, traditional method, there is no problem happening here. Uh, But when you look it from a network perspective, you will realize that there is some pattern. There are some there is some things happening in the timing of these transactions, in the clustering geographically, in the senders and the receivers. That is, all these things they come up. So what was happening here is there are multiple senders, and they were going through multiple jurisdictions at different times, and they were finally reaching the same few beneficiaries. So that was also, this was what was happening here, was a mule network activity, and a lot of, or maybe it could be a layering of money, layering of funds, basically coordinated structuring. All of this was happening in this case, but you cannot see this when you are looking at it from a simple, one transaction at a time perspective. But when you are actually looking at it from a network perspective, so we have recently worked with exchange house, and there we have implemented this system wherein they can analyze their all their transactions from a network perspective. So that is quite required. That saves a lot of saves them from a lot of exposure, from a lot of risk. So that is what helps them. Okay. Uh, so this is what we are the we I'm sorry, I'm saying we, this is what the regulator is going to expect. They're going to expect behavioral ecosystems, network understanding, network contextual intelligence. Basically, this case is about how you look at the network and you look at the bigger picture. So this is going to be an expectation. You cannot be just focusing on one single transaction, and what you will be looking at is contextual understanding of multiple transactions, and trying to identify, what kind of patterns would be there. All of that would be uh, important. Okay. You cannot have those, same rule-based, threshold-based systems anymore. You need to have contextual information, you need to have network intelligence, and you cannot just rely on isolated transactions. Okay. Because criminals, they are operating in networks, they are very sophisticated, they are well aware of threshold based systems, rule based systems, so they would obviously be very easily be able to bypass those systems. uh, and uh, I also understand what you might be thinking, that we will be, we are not those investigators who will be, who are running behind criminals, trying to stop the criminals from laundering money through our entity. But what happens is that this justification is not going to work uh, as I see in the near future. So again, I'm telling you, so far, documentary compliance is working fine, but you need to be prepared. You need to build these kind of systems, because it is not just the compliance. It is not just one thing. It is also, if such things happen and they come out later, then it hurts our reputation. It adds a lot of cost of investigation and then remediation. All these things take up a lot of energy, lot of cost, lot of resources. So that is also something that we need to look into. Other than that, any which way, the regulator is also evolving, and this is going to be an expectation. It has already started becoming an expectation in our recent cases, and our this is something that the regulator is started expecting. So all these things, again, can you identify those behavioral inconsistencies? Can you understand relationships? Can you see networks? All those things will be coming in. It was rule based, now behaviors are coming in, relationships are coming, networks and patterns. All these things are slowly the evolution of AML in UAE and the world. So it is there. So, since crime is basically they are surviving on networks, those who are investigating, they also need to come up with networks. Okay. So we'll talk about beneficial ownership. Many of our consultants are involved in corporate services, wherein they will be making building entities. So it is okay to have a structure with nominee directors or offshore holding, but it is our also our responsibility to look at it if it is unusually opaque, if the structure is unusually opaque. So that is one thing that corporate service providers they need to look at. I think many chartered accountants are providing these services in the UAE. So you need to look at these small things. There are common signatories. There is too much of opacity. There is a minimal operational footprint. There is rapid transaction activity, money is coming in, quickly going out. These are all type of red flags that are there, which you need to look at. So it is okay, again, as I said, we cannot just rely on the documentation if things are very obvious that these red flags which you can see, which you can understand, but you are not uh, reacting to them, you are not so that is something which the regulator does not expect from you. The regulator expects you to report such kind of inconsistencies and to react to such kind of inconsistencies. So there is a very thin line actually, what is legally correct, what else is possible, what kind of opacity is possible. There is a very thin line. So, does it have any economic substance? Why are so many unrelated entities overlapping here? Why are there so many nominee? Why is there so much structuring happening? So you need to question that whenever you are building any entity, you need to question that, and you just have to see is there a commercial sense that is making sense in that case. All those things you need to look at. Okay. Uh, Not just the documents. The traditional approach is just getting the information, getting the documents. You need to see who is effectively controlling is, who has influence. Does it make any sense to have such a complex structure? All those things you need to uh, see. Well, why was there so much opacity? Does the commercial sense make sense in this case? All those things you need to question. Okay. So there is, as I said, it's a very thin line. Sometimes there's a legitimate complexity, sometimes it is a sophisticated opacity. So you are dealing in a very gray area. So it is upon you to see how do you respond to such situations. What the regulator is looking at is that you are being a professional, you are well aware of how things are happening, and you are quite capable of understanding these patterns. And if you ignore them, that can be a problem. That is what even if you have all the documents, it could still be a problem because the regulator is expecting much. So you have all the data, but you fail to interpret that data properly, that will be a problem with the regulator. Okay. So whenever you are building any entities, you need to see, how there's economic substance behind it, the structure makes sense, the relationships make sense, too much of nominee behavior, all those things you have to see. There's unusual, irregular, unnecessary opacity that also you need to look at. Okay. So this is what, as I said, historical focus has been on just the documentation, but the future is about network analysis, is behavioral understanding, finding the source of wealth, finding the ultimate beneficial owners. All those things are a part of our compliance officer's job, MLRO's job, or those people who are making those entities. All of them, they need to have these details in place. So, okay. So this is a case where we are talking about an insurance industry. We are talking about fraud here. So the theme of this case is that we are talking about how fraud and money laundering are not completely divergent. So what I have been working in the fraud domain for almost 15 years now, and now last 4 5 years I have been in the anti-money laundering. So there is a very major overlap, and that is what also institutions need to understand. So this case, we'll quickly go through this. uh, the basic idea is, when there were so many policies being you know given and policies being claimed, everything was on paper, it was all fine. Structurally, there was nothing wrong, uh, properly documented. Later on, when you look at it from an intelligent perspective, from investigator perspective, you realize that they are overlapping beneficiaries, there are overlapping vendors, there is some geographic concentration, there is some common intermediary, similar document. All these things come up when you look at it from an investigator's lens. Okay, so this is what happens in most organizations. We are talking here about an insurance organization. Claims, fraud, AML, everything is set differently. So this is what happens. You are not once those who are managing claims, those who are managing AML, they are totally separated. They don't look at it together. So here, what was happening was money laundering was happening through claims fraud, basically. So claims were being overstated. Money was moved using that insurance company, and basically it was being laundered through that insurance company. So the insurance company could not realize that because they were focusing on the claims. They were not realizing that money laundering could be happening here. So traditional AML focus, we will be looking at sanctions, you're looking at transaction activity, thresholds, all those things you will be looking at. You are not looking at, how this whole system of, can be used for money laundering. So even if this claims organization could have understood that, fraud was happening in those claims, they could not link it to AML. So nowadays, it is very important to link your fraud department with the AML department for insurance companies, for banks, NBFCs, fintechs. It's very important. So this is just about that. I think we should quickly move. I'll just discuss the themes because we are close to the, and you can go through this presentation. This always happens with me. I always try to discuss too many cases, and then it is a lot of content. Uh, because I just want to share more and more, uh, which is more relevant material, and I just cannot pick. I think most of it is very important. So you can of course go through the. I'll just go through the main theme. Okay. Now this is case 7, which is a fintech. The problem with this fintech company that we identified was very simple. It was fintechs are growing and digital payment companies are growing very fast, and their compliance is because they are at a very high speed. They are innovating, they are acquiring customers, onboarding customers very quickly. They are building vendors and high velocity international transactions. So it is their compliance function does not move that fast. They need more powerful systems that have high velocity, which is a problem in many fintech and digital payment companies. So their systems are not that sophisticated. They are using systems that are being used by NBFCs or smaller banks. So there will be too many false positives, lot of alerts, a lot of investigative effort that goes on. Investigators also, they become tired, and they just want to close the transactions. That is the problem, and they just want to operationally close all these transactions, and that leads them to a very high exposure. So even though most of the countries, like I was in Muscat few days back, there also we are there is a lot of digital push which is happening, and fintechs and digital payment companies are rising. So all of that is there, but they need to also be protected from this exposed risk that is coming in. And our focus has always mostly been on expansion, customer acquisition, but AML discussion, obviously a compliance cost that goes on the back seat. But the AML function also needs to evolve at the same pace as the other functions are evolving. Even though the countries are promoting fintechs and digital payments, they will not tolerate, the regulator is not going to tolerate these glitches when it comes to. So the problem here is overwhelming. Basically, it is because of so many alerts, so many transactions happening, it is becoming overwhelming. That is something these fintechs and digital payment they have to look into, which is going to come up with the regulator. They cannot come up with simply that, we have systems in place, we are doing the monitoring. Uh, they need to have stronger systems, and simply automation does not help. You need to have automation can scale up things, quicken things, but it has to be done intelligently, which I've seen in many fintech companies. They are just operationally, they are just adding up a lot of, scaling up, automating quickly, but they are not doing they are not ready. Okay. So when your operations are scalable, your compliance also needs to be scalable. Okay. You need to have a scalable system. You need to have monitoring specific to your industry. All those things need to be present. Okay. So I think this sanctions case 8 is about sanctions. Uh, this what we are talking is that it's just the basic sanctions that we check is not going to work anymore. You need to also be ready for sanction proximity risk. So again, the sanction screening has to be very intelligent. That is another expectation. If you see the transaction is being routed through multiple countries and all that is happening, it is not sufficient. You need to have the intelligence as to if it doesn't match any sanction, but still it is anomalous and it is does not make sense. You need to dig deeper, and only then you have to conclude the understanding. Okay, somebody raised hand. I think we'll be discussing these any questions just after the session, please. Thank you. So uh, that is just all about our sanction screening. Case 9, I will avoid, it is not very important. I'll just go to the final case, which is about AI. So this is the final. Most of the organizations have started using artificial intelligence, but you cannot get away from the regulator just by saying that we have an sophisticated AI system. The system should not be opaque. It should be fully auditable, fully explainable. It should, and those organizations that are only operating based on AI systems will be in trouble. You need to have human interference, because if you rely too much on artificial intelligence, then the manual intelligence that is declining, investigators are not challenging anything. So that is something which is happening. So this is again what the theme of this case is, that you cannot just go to the regulator and say that we have done this and we have an AML system. So that is how it is. You need to have uh, explainable systems. There should be a model governance. There should be human involvement. There should be investigators who should be challenging the artificial intelligence wherever it should be there. So just relying completely on AML is not so defensible. AML has advanced machine intelligence. it has human skepticism, and it is also a regulatory defensible. That is what the AML we are looking at. Okay. Okay. I think this is it. Yes.
Thank you so much, Bharat, for your deep insights. Uh, Maybe you can stop sharing the screen now
Yeah.
if it's not required. Yeah. So before we move on to the questions, I would like to invite Rajesh, who is a practitioner here in UAE from past many years. He's an ex-banker. He is part of one Sadyudama group where I also attend. And yesterday we met, and I thought I'll invite Rajesh to speak for a couple of minutes. He has his own practice in AML. And Rajesh, over to you. Thank you.
Thank you very much. Am I audible,
Yes,
Pradeep?
Yes.
yes, yes,
Yeah.
yes.
Yes. Thank you for the wonderful and sweet and short introduction. Uh, Bharat's presentation, wonderful. He covered 10 cases, I think 9 cases. One case he had to skip. Good 9 cases, all insightful and most importantly practical. Yeah, real life cases looks like. Great, Bharat. So, I would like to just touch upon what he had discussed instead of introducing anything new. So AML is not a tick box exercise. That's what he started off with saying. Yes, I agree with him 100%. Yeah. How businesses should view AML is just their rail guards. Yeah. A rail guard would allow the business to go in its right direction without getting diverted from its main focus. So don't take AML as just a tick box exercise. That's something which I liked in what Bharat had mentioned. And when we say that, how far is the board of directors or the company owners are bought into the idea of proper AML risk management? I mean, that depends upon the money laundering reporting officer or the compliance officer, as we say. Yeah. And if you have the buy in from the board, then AML is something which is smoothly implementable. Nothing is I mean, it's not a rocket science. We all know the framework. There is a universal framework. Just adopt it, apply it, and get it done away with. The best way to ensure as a MLRO that we monitor that and get the results up to the board, I would recommend do a proper quality assurance on a periodic basis. Yeah, whatever results sets are coming out of your quality assurance, take it to the board. We have different types of board reporting available. Just do that. Get the board or the owner of the company. If it's a real estate, small, big, medium, doesn't matter. Just get the board of directors or the owners on your side, and the game is very simple.
Right.
That's very important. Yeah, with that, I and finally have the right infrastructure in place for management of your AML. I know Bharat spoke about artificial intelligence. That was his last slide. Yeah, artificial intelligence can be as good as what its capability is. Yeah, how far it can read the gray area and make that into some decision making, proper decision making tool. So with that, I'll stop here.
Thank you.
Fantastic, Bharat. All the best to
Thank
you.
you. Thank you.
Thank
Thank you,
you.
sir.
Thank you, Rajesh. So we don't have much time left, so but we can take one or two questions max. So anyone who has a question can please unmute or raise your hand, and Bharat can answer that. Anyone? Gopal, you had a question, I think.
Yeah, yes,
Yeah, please go
yes,
ahead.
sir. If you remember, last month we had IFRS 18, roughly
Mm-hmm.
about 4 weeks back. And I had
Mm-hmm.
actually discussed that before the holidays that people would go for their annual vacation. We should have on IFRS 19 and 20. Sir, I would just request that in the forthcoming days, people will be
Yeah, yeah,
going for the annual
yeah,
vacation.
yeah,
Can
that
you
we
just try
can
to arrange
discuss,
for the
Bharat.
speakers?
Right,
Because
right, right.
IFRS 20, the regulatory difference, I think it's 13 or 14, is going to be replaced with the new IFRS 20 due to the changes. So, although
Yeah,
it's a little technical and
yeah,
maybe like whatever is the draft thing, we can have a brief discussion. and there has not been much of on IFRS 19, which is on subsidiaries
Yeah, Gopal, we can
disclosure.
discuss this. Do you have any question for this topic, today's topic?
No, nothing much, because 6 months back,
Yeah,
Mr. Bharat Jeswani was already there in Muscat, and we had a
right.
CP session also in CVFS,
Very nice.
if I'm not
Okay.
mistaken.
Yeah, yeah,
Yeah.
yeah.
Okay.
Yeah.
So
I
I'll
think a lot of information. I think somebody has asked something. Let's be fair, accept that.
yeah, Dhaval has
Yeah,
yeah,
with
you
audit.
can take it
Agreed,
up.
yeah. With auditors and accountants, let's be fair and accept that the transaction posting teams are pretty low-level staff and will miss the behavioral aspects of a transaction. Will the regulators penalize the company if they miss this behavior? So, see, currently, as I said, currently what we look at is that if you have the documentation in place, everything is in place, uh, it is quite defensible. Your transactions are defensible, but slowly the expectation is shifting, and it is going to obviously evolve in with time. It is going to be like, very obvious anomalies, very obvious laundering typologies. If they are happening, then the company will be penalized. It will not be because it doesn't matter who is doing the accounting or who is the board and the company is responsible if money laundering is happening. So if the documentation is not in place, or if there is some obvious anomaly that is present, so the company will be penalized. So it is their responsibility. They have to look into what kind of teams they are hiring, what kind of structures they are using. So that is their company's responsibility. And if there is something is missed, the companies will be penalized. And that is again, what I'm saying is this, you're talking here about basic accounting and basic problems. Slowly, the regulator is also evolving, and they are looking at more from every reporting entity. That is what is happening all across the world. So that is it. They have to also evolve. They need to have specialist experts. They need to have, as sir suggested, always regularly get your quality assurance done. Check, get it checked of how you are recording transactions, how you are monitoring these transactions. All of that should be checked on a regular basis, at least annually, so that you are not exposed to these kind of risks.
Thank you, Bharat. So before we close for the day, now your final thoughts in 1 or 2 minutes. Yeah,
Yeah. Okay. Okay. My thoughts. Okay. So
yeah,
this
yeah,
was
your thoughts.
So I really enjoyed. I always enjoy, discussing anything that is related to financial crime, money
Right.
laundering. Always excited to share my real cases, share all these things, and I'm very hopeful that everybody learned something, at least something new, and it would be useful to them. Uh, in their practice or in their employment. Somehow this session would be useful in some way. uh, Anybody can reach out to me on LinkedIn if they want to discuss anything related to financial crime. I am working across the globe now. Slowly we are building offices. Our offices coming in UAE also by August. It was supposed to come up earlier, but it is a little delayed because of the war situation. So we'll be coming in there. We are working as expert consultant to many firms where they do not have an AML function. So we are working as an expert consultant to many firms. So if you want to discuss anything, if you have something, some engagement, some complex engagement where you need expert opinion, you can always reach out, or just you can also just say a hi on LinkedIn. I'm very always open to any kind of discussions. So and very grateful to Prabdeep sir, always inviting me, always meeting with me whenever I'm in Dubai, or when he is in India at conferences. He's a friend of mine, and I'm grateful for this invitation, for this session also. Thank you, sir.
Thank you. Thank you, Bharat. Thank you. I would request everyone to please show your love with the emojis to Bharat. We have got a beautiful comment from Dhaval. All of those who are present here can see it, but those who are watching live on YouTube won't be able to see. So I'll read out. This has been an amazing presentation, quite different from the usual ones that just list down the mandatory requirements by Note Arun. It's the first time I have come across such an insightful presentation. I'm personally looking forward for many more such interactions. My 5 stars to you for this. Full respect. Prabdeep ji, thank you. That was amazing choice of speakers.
Thank you so much. That's very kind of you. And I will definitely share the presentation with Prabdeep sir, and he can then share it with all of you,
Thank
whoever
you.
needs it. And I'll be sharing it on my LinkedIn also, so you can also it will be available on the public domain, so you can get it there.
Right.
Also. Thank you.
Thank you. Yeah, so Gopal, we will be coming up with the IFRS sessions. There is already one planned on 6th July, but we will see what can be done in June. There are a couple of compliance and structuring sessions already placed. We will see how we can adjust in the June month. Thank you, Bharat. Thank you to everyone. Have a good weekend, good Eid break.
Thank you
We
all.
will
Thank
be,
you.
yeah, we'll be meeting for internal audit on 30th, though it's a Eid break, but for internal audit session, audit in age of disruption. That's what on 30th we are doing. Thanks, Bharat. Have a good time. Take care. Thank you. Bye bye.